All right. Good afternoon, everybody. It is afternoon, noon here on the East Coast. Welcome, everybody, to today's webinar. I just want to do a quick sound check just to make sure you guys can hear me okay. You can see my screen, a bunch of silhouettes of very confident people. There we go. All right. Peter says yes. Welcome, Raj. Welcome, Brian. Welcome, Walter. Fantastic. You guys can see me. Want to welcome everybody joining me via GoToWebinar and YouTube as well. So we are streaming live on YouTube. Thank you guys for being here. My name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. This is our team. This is our education team. Very proud of these folks. You know, we've come a long way over the years. When I first started with VectorVest, it will be 17 years in 5 days. July 10th is my anniversary, 17 years with VectorVest. And when I first started, our education focused solely on the VectorVest program. You know, the VectorVest system of market analysis, the VectorVest system of stock analysis, teaching those concepts, how to build watch lists, how to run searches, create portfolios, run back tests. And that's really where our education focused on back then. And it was only one or two folks in the education department. You can see we've grown so much over the years. And, you know, now we teach you guys how to trade options. We have a whole options department within the education department. We have a retirement department as well, which Jim Penna heads up, and myself, who really, focuses on swing trading and different swing trading strategies. So we got you guys covered no matter what type of portfolio you're managing, what type of objective you have, long-term, short-term options. We got you covered. We'll help you manage those different types of portfolios. And really what we're going to focus on today is more of a shorter-term swing trading type of an approach. What I'm going to show you guys here today is not a retirement approach. It's not your buy and hold. Hey, I'm going to hold on to these stocks for a long period of time. This is for really the money that you have set aside to trade a little bit more actively. Okay, so I'll talk a little bit about that in a moment. First, call them the three gets. Get number one, get a pen and a piece of paper, something to drink, of course, if you'd want. But pen and a piece of paper, very important. We are going to, I'm going to ask you guys to write a few things down in a little bit. So that will help, of course. Get number two, get rid of any distractions. This is difficult sometimes, you know, it's midweek, midday. You know, my wife, work remotely. My wife has our two boys. They got a little play date. They're going to go for lunch. So no distractions here, which sometimes is not the case. Sometimes they are home. You know, my wife does a great job of keeping them as far away from me as possible during any webinar or anything like that. 5 and 2 years old, so you can guess they can be a little distracting at times. And then finally, what you guys are here for, get ready to learn. Okay, I want to commend you, applaud you for that. Again, like I said, it's noon here on the East Coast on a Wednesday, day after a holiday here in the U.S., 4th of July. So you guys are here picking up where you left off on Monday or last week, ready to go again. So that's fantastic. So here's what you're going to learn today. First, we're going to talk about 5 common principles professional traders follow. I'm going to teach you an extremely easy and effective short-term trading strategy, and I emphasize short-term. And then finally, how to quickly and easily identify the best trades. And my promise to you is that if you follow the steps that we discussed today, you'll know how to identify the correct setup, entry, and exit, most importantly, for each trade. And I think this will help. If you stick with me to the end, I will share with you a copy of the slides I used today. I'm going to be in the slides for the most part for the whole session. So I think these will help you kind of follow along once you guys receive the recording later, which you will either later today or tomorrow. But just stick with me to the end. We'll be together for about an hour. So at about 12:40, 12:45 or so, say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel, and we'll email you, you folks who are joining me via YouTube, we'll email you those slides later. Okay? So let's first talk about what makes a pro a pro. So what are the qualities that separates these men and women from the average retail investor. So we're talking about professional traders versus the average retail investor and retail trader. And what separates them from us, really. And this segment here is all about getting you in the correct mindset. Because again, this is not your buy and hold retirement approach. This is for the money that you have set aside to trade a little bit more actively. And we hope you're doing that. We hope that you are allocating portions of your overall investment capital to different instruments and vehicles like options and like dividend paying stocks and long-term core holdings. And then maybe you have money set aside for swing trading, because those positions, a position in a retirement portfolio doesn't belong in the same portfolio as a swing trade. They're both managed differently. They're taken because of different reasons. They shouldn't be in the same portfolio. So we want you guys to be kind of creating different portfolios within the VectorVest program. You could do that in the Genius. You can do that in RoboTrader. Create different portfolios and make sure you're separating your trades and from your investments. Makes it a little easier to manage. So this is about what separates pros from the average retail investor. And the first thing is that they are realistic. They know that there's no magic pill that they can take that will make them better traders tomorrow or overnight. Success in this industry, really in any industry, comes with time and effort. Just ask anyone who's ever been, really good at anything, and they'll tell you that it took hard work. It didn't happen overnight. And again, that goes for any industry. Finance, construction, sports. Professional basketball players are professionals. They have some God-given ability, of course, but boy, did they put in the work. I used to play basketball, and I know how much work it took just to get where I got, a Division II player. And a lot of guys obviously are more gifted, but they do put in the same amount of work to get to the top, and that's what it's gonna take for us. Okay, to trade like a pro, you have to put in the time and effort. It's not going to come overnight. Next is that they control their emotions. This is the hard part. A little easier said than done. They don't allow losing trades to affect them. They don't think of the money first. They don't think of the result first. They focus on doing the right things, making the right trades, making the right decisions, following their plan. And they know that if they do that, the money will come. The returns will be there. And one of the reasons they feel this way is because they place trades based on facts and data rather than a gut feeling or a recommendation from your Uncle Louie or a friend in the neighborhood who just said, I bought this stock, you should buy it, right? They don't place trades because of that. They place trades on data rather than what they feel about the stock. And we've all been there. Earlier on in my career, I placed trades. I bought stocks just because I thought it was going to go up. I didn't know much about the stock market back then, but I had a feeling. Pros don't think that way. They look solely at the information in front of them to make decisions. Next is they're prepared. They know exactly when they're going to get out of a trade even before getting in. Can you say that? Kind of a rhetorical question, but can you say that with every trade that you place, forget about investments, guys, we're talking about trades. With every trade that you place, you know exactly when you're going to get out, either at a profit or a loss, even before getting in. It's part of the setup. It's part of trade structure, okay? I love this slide too because, first thing you do when you get on an airplane, right? What does the flight attendant do? They just walk you through how to get off just in case of an emergency. And that's what we need to be able to do and understand before we get into any trade when we're going to get out. And they know this because they've examined and tested different techniques and different exits to figure out which one is best. It's not arbitrary. It's not just a 10% trailing stop on every stock that you buy. Different setups and different strategies require different types of money management and different exit criteria. And then finally, most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well. That's the easy part. But they're resilient when things aren't going so well. When they hit a cluster of losing trades, 3, 4, 5, 6 in a row, it's going to happen to everybody. How you react and how you are able to kind of bounce back, and that's one of the things that separates the pros from the average trader. They have a plan and they stick to that plan, and it's because they've rigorously tested these systems through different types of market conditions over many number of years. Now, what happens if you continue to struggle with some of these things? So if you're someone that's struggling with 1, 2, or more of those kind of characteristics, what if you continue to struggle? If you don't know when to get out of a trade before getting in, if you wind up like that guy punching your monitor after a series of losing trades, your emotions take control and it just decision making is clouded. If that keeps happening, you're going to go broke. You're not, I don't mean you're going to be living on the streets unemployed, but you won't be playing this game too much longer because losses are just going to keep building up and building up and building up. You wind up broke with no more money to invest. If done the right way, if you start correcting those mistakes and really focusing on those things, you'll know exactly what you're doing no matter the situation. Think about the confidence that you'll have. And once you start to develop better habits, you'll start to see more consistent gains. There is a big mistake, though, that traders make when first starting to implement short-term trading systems. They follow unproven, complicated strategies. They feel like they need to use 5 different or 6 different technical analysis indicators and 5 different types of moving averages to help identify entries and exits. For some reason, new traders who are just starting out trading this way, they find value in complexity. Most of the time, that's only going to lead to confusion and frustration, because if you apply too many different indicators, there are conflicting indicators, there's redundancy with indicators, so you have to really find the sweet spot in how many indicators are you using, what type of information is each indicator giving you. Because there are oscillators, there are trend indicators, there are indicators that identify overbought, oversold, there are trend strength indicators. You have to understand what the indicators are and not, conflate the picture because you're using too many indicators. So what I want to show you today, you may have heard of this system. It's called the RSI-2 trading system. It was developed by Larry Connors, not by me. Larry Connors developed this system. Larry Connors is an author. He's a trader, written many books on trading. He has over 30 years in the financial markets industry. This strategy, kind of 30,000-foot view here, this strategy focuses on stocks in long-term uptrends, but are experiencing short-term corrections. It's rather ambiguous, but he defines it, and I'll go through that in a moment. And what I love about this system is that it's so simple. It only uses 3 indicators. Not 5, not 7, 3 indicators. A 200-day simple moving average to identify the long-term trend, right? Key concept number 2 there is that's what types of stocks that we're really focusing on first and foremost, stocks that are in long-term uptrends. So he uses a 200-day simple moving average to identify the long-term uptrend. The short-term correction is identified by using 2 indicators, a 5-day simple moving average and a 2-period RSI. You might be asking why. Reason why I say that is because I get that question a lot when I do this webinar. Why a 200-day moving average? Why not a 150? Why a 5-day simple moving average? Why not an 8-day EMA? While I'm not Larry Connors and not in his head, the only answer that I have to that is because it worked the best. This combination of these 3 indicators worked the best, and that's why it's published, right? That's why it's the system. So and going back to what separates pros from everybody else is that they've rigorously tested different combinations of not only exits, but entries as well, and indicators. So I'm sure he tried different variations of these moving averages, and he probably tried a 4 RSI, a 6 RSI, maybe a 10 RSI. So he landed on the combination of these three because it worked the best. So let me show you how the system works. Here we're looking at Procter & Gamble. Now this is from November of 18 to November of 19. Don't worry about why I went back so far. I'll explain why I went back so far in a moment. RSI stands for Relative Strength Index. Relative Strength Index. I'll get to that. I'll get to the indicator in a moment. November of 18 to November of 19. Great stock, right? Overall price moves from bottom left to upper right. During this entire 1 year period, it stayed above the 200-day moving average. So what does that tell us about this time period here, this 1 year that we're looking at? It tells us that during this whole time period, the entire 1 year, the price was in a long-term uptrend. Price above the 200-day moving average, long-term uptrend. But it pulls back like every stock does. And the white line running through the price is that 5-day simple moving average. The short-term corrections are identified when price falls below the 5-period moving average. Two of the three indicators. Here's the third, Relative Strength Index. RSI is at the bottom. It's on a 0 to 100 scale. It oscillates between 0 and 100. And the industry standard look-back period is a 14-day look-back period. We're looking at a daily price chart here, by the way. 14-day look-back with the lower end at 30 and the upper end at 70, meaning when the 14-period RSI goes below 30, it's considered oversold. When it goes above 70, it's considered overbought. Okay, and you could plot, the RSI on any stock over any time frame. Now, during this time frame here, I had to actually go back a little bit more to about June of 18. You can see that the 14-period RSI only fell below 30 one time. Now, don't get me wrong, great entry, great oversold situation, but not fast enough for what Larry Connors was trying to do. So what he did was he sped up the indicator and changed the look-back period to 2. So instead of a 14-day RSI, we're now looking at a 2-day RSI, Relative Strength Index. And when you do that, when you change look-back periods of indicators that have certain values in determining overbought and oversold, like 14-period RSI, that's industry standard. Below 30 is oversold, above 70 is overbought. With stochastics, industry standard 14.3 slow stochastics, below 20 is oversold, above 80 is overbought. When you start to change the look-back periods of an indicator, you have to adjust those levels. Okay? You have to adjust those extreme levels. So what he did was he shortened the look-back period from a 14-day look-back period to a 2-period RSI, and he also lowered the extreme level from 30 to 10. Again, if you're asking why he did that, it's likely because it worked out the best. Okay? So here's your trade. Ready? So we have the three indicators. We have the 200-period moving average to identify the long-term trend. We have the 5-period moving average and the 2-period RSI to identify the short-term trend. So price above the 200-day moving average, but below the 5-period moving average, and the 2-period RSI below 10, there is your trade. There's your setup. Again, price above the 200-day moving average, short-term pullback within an underlying uptrend, price goes below the 5-period moving average, and the 2-period RSI goes below 10. There's your setup. Let's look at what it looks like written down on paper. So the entry rules are you buy only when the stock is above the 200-day moving average and below the 5-day simple moving average with the 2-period RSI below 10. Here's the kicker that we're not necessarily used to. We're going to take these trades. We are going to buy near the close of the day. When I trade this system, and I trade it often, I am buying as close to the close as possible. I put a market order in at about 3:55 p.m. Eastern Time. Market order, you're going to get filled. Try and mess around with limit orders, you might not get filled. But I'm buying as close to the close as possible if those three rules are in place. Okay? Here's the exit criteria. Everybody clear on the entry rules? You buy when the stock is above the 200-day moving average but below the 5-day moving average with the 2-period RSI below 10. If you're seeing this at the end of the session, you're going to buy the stock as close to the close as possible. Exit criteria is you exit when price goes above the 5-day simple moving average, and you are also exiting near the close of that day, whenever that happens. By the way, the average holding period for an RSI 2 trade is the average is between 2 to 5 days. Okay? Let's look at some examples. Procter & Gamble, same stock we looked at there long term. Now, notice how when I zoom in, right, I'm only looking at 2 or 3 weeks here now in July of 2019. We lose that purple line, don't we? I can't see the 200-day moving average anymore because we're just zoomed in too tight. I can see the 5-day moving average. I can see the 2-period RSI. There's my value of 10, which is the horizontal red line. But just know, as I go through each example here, we're in an underlying uptrend. Okay? Question is, for buy-in, do you anticipate whether the three criteria will be fulfilled at the end of the day, or do you buy on, or instead you're going to base the previous days? No, end of today. Today, right now it's 12:23 on a Wednesday, July 5th. If at 3:45 today, those three rules are in place, I will buy. If at 3:45 today, if the price of the stock is above the 200-day moving average but below the 5-day moving average and the 2-period RSI is below 10, if that's in place at 3:45, 3:50, you have your setup and you take the trade. You can use this on any time frame, by the way. Day, intraday, end of day, weekly. Same things, same rules apply. So instead, if you're looking at a weekly chart, it'd be a 200-week moving average. It'd be a 5-week simple moving average, and it'd be a 2-week RSI. But the values are all the same. So let's take a look at an example. July 23rd of 2019, we have a setup. Why? Because the price of the stock we know is above the 200-day moving average, but as you can see on this day, it is going to close below the 5-day moving average, and the 2-period RSI was below 10. Now, I don't know what the price of the stock of Procter & Gamble was at 3:50 p.m. on July 23rd of 2019. I don't have that data. I do know what the stock price closed at. So for the purposes of my demonstrations here, I'm going to use the closing price. We are trying to get it as close to the close as possible. Okay? As close to the close as possible. So all those things were in place. Stock price closed at 113.85. We're going to, give or take a few pennies. That's what price we're likely going to get in. We take the trade. The stock price actually falls the next day. But there on July 26th, it closes above the 5-day moving average. And we exit. We sell. We sell at 114.73. That's a winning trade. And what I want us to focus on are winning trades. Okay? There is no stop loss here. If I go back a couple of slides, remember what the exit criteria is. Exit criteria is close the position when the price of the stock closes above the 5-day moving average. In this example, that resulted in a winning trade, right? If we didn't take the trade on that day, we had another opportunity on July 24th. I don't know why we didn't take it the day before. We didn't have any buying power. We were on vacation. We just weren't watching the market that day. But July 24th, we have another setup, right? Price of the stock is still above the 200-day moving average, but it's below the 5-day moving average, and the 2-period RSI is still below 10. So if we would have bought it on that day, roughly 113.15, we sell it a couple of days later, same exit. Price of the stock closes above the 5-day moving average. We exit the trade. Okay. There's a caveat I'll get to in a moment. Brian is asking about what happens if you want to stay in the trade to let it run a little bit. I'll talk about that in a moment. Okay. The very next setup was on August 5th of 2019, right? The price of the stock is still above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. There wasn't a setup the day before or the day before that, even though price of the stock was below the 5-day simple moving average, because the 2-period RSI was not below 10. So on this setup, if we buy at 113.08, okay, we sell 2 days later at 115.52, right? Price of the stock closed above the 5-day moving average on that day. We exit. That's another winning trade. So far, so good. 3 trades, 3 winners. The very next one, so what was that date? That was August 5th of 2019. The very next setup, and I'm just going from left to right, guys. I'm not bouncing back. I'm not skipping over setups. Okay, after hours trades, I'm not going to read all that, Walter. We don't trade after hours. This is a very unique, systematic technique. There's no, okay, so let me stop everybody now when you guys kind of the question comes up. What if I did this? Could we do this? Right? Can we do that? I'm going to stop everybody and say, no, we can't do any of that. That's not going to be part of how we trade this system. So pre-market, after hours, intraday activity, noise in between, none of that is gonna matter. It's at 3:45. What's the situation? On this day, September 10th, we have another setup. Okay, we have another setup. Price of the stock is still above the 200, but it's in a short-term correction where price has fallen below the 5-day moving average and the 2-period RSI, very important, of course, right? It's the third piece of the puzzle. Okay. 2-period RSI below 10. If we buy there at 119.88, nice short-term gain there, huh? In just a couple of days, price closes above the 5-day moving average. We exit near the close of that day. The decisions are made near the close of any session. Never at the open, never at noon. Any decision, buy or sell, is made near the close of the day. Makes it a lot easier moving forward to understand. Okay. Another winning trade. All right, so far so good. I think that's 4 winners. Here's another one. 121.08. We sell 2 days later at 124, right near the high of that day, which is fantastic. Can't get any better than that. That's another win. Consecutive winning trades here. We haven't lost yet. Somebody asked about stop losses earlier. So it's not a stop loss. It's closing a trade at a loss. How would you close a trade at a loss? Well, in this case, there's a setup. We buy at 120.05. Price is still above the 200-day moving average, but below the 5-day moving average at the 2-period RSI below 10. If we buy it at 120.05, the stock price falls the next day, and it just kind of keeps drifting a little lower. But here is when it finally closes above the 5-day moving average. And that price is 119.08. So we sell this trade at a loss. Okay, we sell this trade at a loss. It's not a stop loss necessarily, right, as in the traditional sense, but we close it near the close of the day at a loss. Okay, an unfilled candle means the close was at the top of the body and the open was at the bottom of the body. A filled candle means the open was at the top of the body and the close was at the bottom of the body. The color means the price of the stock, in this case, because it's red, closed lower than the previous day's close. A green candle means the close was higher than the previous day's close. So this is a filled green candle. It's green because it closed higher than the previous day's close, but it's filled is because it closed lower than the open. Open is at the top of the body. Okay? Now that was a losing trade, right? We buy it at 120.05, we sell it at 119.08. That's a losing trade. Now, if we didn't take the trade the day before, the very next day on October 15th was another setup. So in this case, if we would have bought it at 117.20, we sell it at 119.08. That's a win. A couple of days later, setup 116.63. You sell it at 119.08. Another winning trade. So I showed you guys, I think, 8 setups. From July of 19 to October of 19. 3-month period, there were 8 setups. 1 loser and 7 winning trades. That's not bad. I know that's a small sample size, okay? But not bad for 8 consecutive trades. You made money on 7 of them and you lost on 1 of them. Okay, now I know, again, that's a very small sample size. So what I decided to do, and I told you I'd explain why I went all the way back to 2018. Because, of course, I could have taught you this system going back to 1970, right? It's the same system. It's the rules that matter. Doesn't matter the time frame that I teach you it in. I'm going to show you a couple of recent examples, by the way, of trades that I actually placed with real money. But for the purpose of kind of my demonstration here, let's go all the way back to November of 2018 now with Procter & Gamble and move all the way to current. I showed you guys 8 setups in a matter of, I think, 3 months, 2 or 3 months. From November of 18 all the way to current, for that one stock, Procter & Gamble, there were 62 RSI-2 setups. What's an RSI-2 setup? An RSI-2 setup is price of the stock above the 200-day moving average but below the 5-day moving average with the 2-period RSI below 10. That is an RSI-2 setup. There were 62 of them over this almost 5-year period. 52 winning trades, 10 losing trades. That's an 84% winning trade percentage. That's a very good winning trade percentage. I'm being modest, right? That's an excellent winning trade percentage on this one stock. I get it. You know, I have to teach you the technique, so I got to pick a stock. Now, and remember, that includes, you know, kind of more recent activity as well, more recent market action when the price of the stock was below the 200-day moving average. Okay? Now, as of March 7th of 2023, that was the last time, that was what? 4 months ago. That was the last time I did this webinar. And on that day, the top 5 CI stocks in the S&P 500 no petro watch list were the stocks that you see there: LW, STLD, PWR, GPC, PGR. From March 7th of 22 to March 7th of 23, across all 5 of those stocks, there were 89 RSI-2 setups. By the way, CI, yep, got there, getting there, Ann. CI is a VectorVest proprietary indicator, stands for Comfort Index. You guys heard of the Ulcer Index? It's the opposite. Ulcer Index rises the more a stock's price falls. The Comfort Index rises the more a stock's price rises. It's on a 0 to 2 scale. Above 1 is good, below 1 is bad. So what I did was I went into that watch list, the S&P 500 no petro watch list, 500 stocks, roughly about 480 and change, and I sorted that list by CI, which brings to the top of the list the highest CI stocks. What does that mean for those stocks if they're the highest CI stocks in that list. It means that they've gone up the most it means that their price growth has been persistent over at least the last 1 year. Bottom left to upper right charts, like Procter & Gamble. On March 7th, again, 4 months ago when I last did this webinar, those were the top 5 CI stocks in the S&P 500, and across from March 7th of 22 to March 7th of 23, there were 89 RSI2 setups, 74 winning trades, 15 losing trades. That's an 83% winning trade percentage. What's the common denominator or the common theme here? We're looking at mid-80s winning trade percentage. Okay. Since March 7th of 2023, okay, those top 5 CI stocks had, across all 5, since March 7th of 2023, so over the last 4 months, since the last time I did this webinar, those 5 stocks, 36 RSI2 setups, 29 winning trades, 7 losing trades. That's an 81% winning trade percentage. Again, what's the theme here? The theme is, it seems like no matter what I'm doing, I'm going between 80 to 90% winning trades. Let me put some monetary dollar amount of value to this type of trading system. No, all daily charts. I've been looking at nothing but daily charts. Okay. Yes, Alan says, can you mirror this on the short side? Yes, I'm going to show you that in a moment. Okay, Raj, because I'm getting there, my friend. I'm getting to your question without answering it directly, because I'm going to get there a little bit later. Okay, I'll explain why in a moment. So this is a long-term back test from 2010 to current, centering around the same RSI2 system that I just taught you. The difference in this portfolio, in this long-term portfolio, is the exit criteria. Now, within the VectorVest program, there is no way to automate closing a position when the price of the stock goes above the 5-day moving average. No way to automate it. What I taught you just now was a manual type of exercise, manual type of trade management. You have to be there at the end of the day to make sure the price of the stock is above that 5-day moving average to exit the trade. It's manual. This is automated. It centers around the same setup, but the exit criteria is a little different. I'll get to the exit criteria in a moment. Okay? In 13 years, this has produced 261 winning trades, 20 losing trades. That's a 93% winning trade percentage. The VectorVest composite is only up 160% over this same time period. We made 863%, and it's just still trucking along. This was COVID, destroyed. It hurt the portfolio quite a bit, but we just, we managed to make new highs here on this portfolio. Okay, here are a couple of recent trades that I placed. HCA, I bought on May 25th of 2023. This is the same RSI2 layout. This is the purple line is the 200-day moving average. The white line is the 5-period moving average, and the 2-period RSI down at the bottom. And the red line is 10. In our swing trading coaching group portfolio, we have coaching groups, different kind of coaching groups, an options coaching group, retirement coaching group, and a swing trading coaching group. I head up the swing trading coaching group. I bought HCA on May 25th of 2023. The price of the stock was above the 200-day moving average, but below the 5-day moving average with the 2-period RSI below 10. On this day, on June 1st, the price of the stock closed above the 5-period moving average. I didn't close the position on that day. And somebody asked about, what if you think a stock has room to run? How would you manage it? Larry Connors, and this is not how I would manage it, but Larry Connors has a caveat to the exit. Instead of using the 5-period moving average, he says if you feel like the stock has a little more room to run, open that up to a 10-period moving average. So I closed the position the next day at a really nice gain there in just a matter of about a week. Okay, so that was a recent bullish trade that I placed. Here's a recent bearish trade that I placed. Flip the rules over. So for a short trade, what do we need to see? We need to see price below the 200-day moving average, but above the 5-day moving average, and the 2-period RSI above 90. That is the short rule. I shorted the stock on June 15th, and I didn't wind up selling it till maybe here, because I just felt, I mean, what a perfect trade, right? What a perfect short trade. Short it near the close on June 15th. The stock crashes the next day, crashes the day after, and just keeps falling. Guys, I'm going to let the thing run, right? I'm locking in gains. I know I have a really nice gain. I probably winded up closing it, I don't know, maybe somewhere here, or, you know, the first sign of strength, I probably closed the position. Home run trade. This was like a 15% winner. But just a perfect trade. So yes, you can flip it over. You can flip it over and use it on the short side. So you're probably wondering, this is fantastic, but I don't have time to look at all these charts. If you're telling me I have to be there in front of my computer at the end of every day to see if I'm going to take the trade or exit, I don't have time to do all that. What I'm about to tell you eliminates all that time. No matter what we teach you here at VectorVest, we want you to be able to do it faster, smarter, and better. So you're here today because you heard that this webinar is called How to Trade Like the Pros. So you want to take your game there. You want to get to the next level. Funny, quick little story. I started playing golf about a month or two ago, and I'm watching video after video after video after video. I'm trying to take lessons, right? Just to, you know, get a little bit more competitive when I go out there with my friends, right? So you're starting to kind of implement some of these techniques that you're learning because you want to take your game, no matter what game that is, to the next level. Now, what I want to do is I want to give you all of the answers instead of having you kind of take bits and pieces of what I taught you today. So that's why I put together this 6-session course. It's called How to Trade. It's called Trade Like a Pro. I'm going to teach you, myself and Steve Chappell, techniques from 3 of the very best professional traders in the industry, Larry Connors included. And he has another technique that I'll talk about in a moment that will teach you. You'll learn top trading strategies of the pros and how to quickly and easily identify the best trades. I hope you saw that if you learn to implement strategies like the one I showed you today, you'll achieve the success that you're looking for. Strategies that already have built-in entry and exit criteria with very systematic rules in place. There's no guesswork. It's either if this is happening or it's not happening. Okay? So here's the agenda. Let's talk about the agenda, guys. I'll get into the scans in a moment and all that. Okay? It's a 6-week course. These modules are all pre-recorded. The first module gets you in the correct mindset. We talk a little bit more how the pros think, managing risk, and this is a very important little segment here in this first module, order entry. Okay, order entry, because there are different types of orders that we'll place. Module number 2, bullish and bearish candlestick reversal signals. Module number 3, identifying market environments, market conditions, and applying the correct indicators to those markets, because not all markets are the same, right? You try to use a MACD in a channeling market, it will fail you more times than it won't. So the idea here at module number 3 is, hey, what's the market doing? Let me apply the appropriate indicator to that market. And then we get into, in module number 4, some of the pros strategies. Linda Ratchke developed this system. It's called the Holy Grail. It's for both bullish and bearish setups, very short term, maybe in the trade a couple of days, maybe a week. But Steve Chappell is going to come in and teach you about this system and how to trade it. I'm going to come back in Module 5, teach you 2 systems by by Charles Schaap. One called the 50-50 strategy, the other called 80 excellence. And then finally, which is the highlight of the course, module number 6, we'll talk more about the RSI-2 system and another system that Larry Connors created called the RSI-25, similar to the RSI-2, but it is exclusively for ETFs. If you're out there looking for a system, right, to trade ETFs that are in, during corrective periods, this is a great one. RSI 25 is a great one. Here are some special bonuses. I'm going to throw this in. This is a 1-year access to a course that we have called Master the Art of Candlestick Analysis. This is a 6-session course. It's a self-study course. There are older mastery sessions that are in there as well that we did live years ago, but this is going to be thrown in there. This value is $995. We sell this course in the university for $995, but we're going to throw this in for you guys here today for taking time out of your day and joining me as a special bonus. Here are some other bonuses that you'll get for Trade Like a Pro. The 6 modules that I just went through, those are all pre-recorded. We, though, as a class, we are going to meet live 6 times. I'll get to those dates in a little bit. But these sessions are designed to implement what you learned in the module. We'll take a look at what you're doing. You're going to have homework assignments after each module. We'll cover the homework assignments in these mastery support sessions as well. So these sessions are great to help you implement what you learned in the module. If you don't already have, and I know there's a lot of folks in here that don't have VectorVest at all, but if you don't already have VectorVest 7 Premium, which is our real-time data, we're going to throw this in as well for 70 days so you have everything that you need during the course. Okay? And not the last bonus, but another bonus session. This is my favorite session, by the way. This is a live trading session. It's essentially kind of mastery session number 7. It's the last time we'll meet live, and what we do here is we wrap everything up. We'll implement what we learned over the course of the 6 weeks. I'll show you how to use RoboTrader to manage your trades, and I'm going to take you through everything in this session from market analysis to trade setup, trade execution, and then trade management. And then finally, this is huge, exclusively for workshop, for course attendees, you will receive pre-built scans that make finding your trades a breeze. You were wondering, I know I got a lot of questions, they teach us all of these techniques. How am I going to find trades? The legwork has been done already. I built these scans to quickly and easily find the best candidates to trade. And the great thing about these scans is they'll be automatically inserted into your VectorVest 7 program, so you don't have to build them yourselves. But these scans are exclusive to Trade Like a Pro students. Also, exclusively for workshop students, you will receive this portfolio. You will receive this automated trading system on the RSI-2. With an automated system, it's not as easy as just, hey, buy and sell, right? Automated system is how many stocks am I going to buy? What market timing system am I going to use? Do I replace or not replace? How much do I put into each trade? What's my industry and sector diversification? And of course, what's my automated exit criteria? All of those rules will be given to you exclusively as part of our Trade Like a Pro course. Most importantly, you get hands-on training by both Steve Chappell, Director of Trading Systems Development here at VectorVest, and myself. We'll both be manning the chat rooms during the mastery session, so you can ask questions throughout the course. Now, the course and all of its bonuses are valued at $29.95. We have an early bird rate that we just put up there of $24.95, but as a thank you for being here, we're going to knock an extra couple of $100 off. So what I'm going to do is I'm going to type in the address that you guys see at the bottom there, www.vectorvest.com/TLP. Make sure I got it spelled correctly. VectorVest.com. Nope, I didn't spell it correctly. /TLP. So you could just click on it right from the chat box. $22.95. 6 pre-recorded modules. 6 live mastery support sessions, a live bonus session, VectorVest 7 Premium, if you don't already have it, we're going to throw in a year's access to Candlestick, the Master of the Art of Candlestick Analysis, the pre-built scans, the live trading session, I think I said that, a lot of bonuses here, and the automated RSI2 trading system. Now, folks, this is 100% money back guaranteed. 100% money back guaranteed. After the end of the course is over, you've done the work, you've at least watched the recordings of the mastery sessions, you've done any of the assignments that we give you. If you're still not satisfied, we'll gladly give you a refund. Do the work. If you're still not satisfied, we'll give you a refund. We take the trading system back, we take the scans back, but we'll gladly give you a refund. Now, here are the dates for the live mastery sessions. Today's the 5th, so 20 days from now, about 3 weeks, is our first live mastery support session. You have plenty of time to consume all of the content that's in the course. By the way, you have access to the course. You'll have access to the course for a year. Mastery session number 1 begins at 11 a.m. Eastern Time. All of these sessions are recorded, and they'll be uploaded to the university as we go. So those are the dates of the live mastery support sessions. Once you register for the course, you will get an email with all of these dates on them. Okay, and our live session, September 5th, we start an hour before the market opens. We go from about 8:30 to 10 on this day because, look, before the market opens, there's work that needs to be done. There's the market analysis. There's the stock selection. There's the trade setup. We're going to go in there together as a group. We're going to run the scans. We're going to look at the charts. We're going to identify good setups. If we do, we're going to know where our confirmation levels are, where our exit criteria is. That's all part of your trade structure and setup. And then execute the trades once the market opens if we get market follow through. And again, all these things have to be in place. So again, guys, go to vectorvest.com/TLP to register. We begin in about 3 weeks. You have plenty of time here. My email address, Jerry D, Jerry, D as in David, at vectorvest.com. Jerry D at vectorvest.com. Okay, shoot me an email if you have any questions about anything that I did today, anything that I talked about today, or anything about the course at all. Shoot me an email. You'll have my email address. You'll have Steve's email address throughout the whole course. Any questions that you guys have, feel free to shoot me an email. Thank you, Walter. Walt says, thank you. Really eye-opening. It's a great technique, guys. It's a great system. I use it a ton myself. Just to show you guys real quick, I use it a ton in our swing trading coaching group portfolio, which is up 18% so far this year. And I use the RSI2 along with a number of other Trade Like a Pro systems. 50-50 I like, Holy Grail. But portfolio's up 18% this year. I've gone long and short using RSI2. Great system. Yes, I put the handout, guys. So you should see the handouts in your GoToWebinar control panel. You should see the handouts. It says TLP. It's a PDF. Just open that, click on that real quick, download it to your computer. But you should see it in your GoToWebinar control panel. You should see where it says handouts. Okay. Jorge, no, there is no way that you can get the RSI2 rules without taking the course again. But as an alumni, you do not pay the full price. So the $22.95 rate, guys, that's available right now, it's only going to be available for a very short period of time. If you're an elite subscriber, someone who's been on us with more than 5 years, uninterrupted service, your rate is $1,497.50. That's half off the regular rate. That rate is always available for you. So if you're an elite subscriber, don't feel like you're in a rush to get the best rate because you'll always get the best rate. For those of you that are not elite subscribers, we try to lower the rate as much as we can. So $22.95 rate, that is only available for a short period of time. I think, Jorge, the refresher price, give our support department a call. I think it's like $700, I think, and you get all the bonuses, you get all the trading systems, you get all the scans again if you don't have those. But give our support department a call for that refresher rate. Okay. All right, guys. Great session. Thank you, Ann. Ann says, thank you. Very informative. Good. Glad you guys enjoyed it. Great system. If you really want to take your game to the next level, start trading consistently, trading like a pro. These techniques will help you get there. Okay. I really love the RSI 2. I love the RSI 25. Love the Holy Grail. Love the 50-50, 80 excellence. I trade candlestick reversal signals myself. So I really loved what I taught there in module number 2. Okay. Yeah, and I don't buy this the options. I'm just trading the stocks. Okay, you're very welcome. Thank you, guys. Have a great rest of your day. See everybody again next week. Take care, everybody.